Okay, folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond, and it is April the 23rd. As you're probably already aware, we have a lot to go over. Intel reported after hours. We're going to talk about the price action. They had 60% margins. That wasn't enough to salvage their quarter, but the shares are getting ravaged after hours. We are short the market. We haven't gotten the trigger yet to go adding more to that trade, to the short trade. But we'll talk about what we're looking for as well. And before we go to the chart of Intel, if I can ask you to please hit that like button, I'd really appreciate it. Thank you very much. And subscribe, tell a friend. And for those out there, I got like 3 emails over the past couple of days. The first one I thought was the user error, but apparently not. 3 people trying to sign up and they're having issues. If you're having issues, please let me know and I will send you out a link. I have my developer working on a login issue right now, so something's going on with the site. We're getting it fixed. Anyway, let's get to it. Franklin, hello. Good evening to you too, pal. Denny, hello. All right, welcome aboard. So I have some articles. I just want to go over some headlines. And you think that these bankers, you wonder whether or not the hyperbole that you hear, the bluster that you hear about them being banksters is accurate. Whether or not there's favoritism. Whether or not they would dare cross the Congress of the United States of America, whether they would dare cross their own customers and the citizens of the United States. But they never fail. They never, ever fail. So, hot off the presses, all of the banks that shafted small businesses out of coronavirus relief, JP Morgan takes the cake. Of the bank's more than 300,000 small business customers who applied, only 18,000 were funded according to a report. Meanwhile, around 5,500 of the bank's commercial banking customers, nearly all of them received their loans through the Small Business Lending Program. In total, JP Morgan originated $14 billion through the loan program. Who got it? Shake Shack. That made the news. Ruth's Hospitality. That's Ruth's Chris Steakhouse. I don't know this name. Potbelly. And speaking of Ruth Chris, now they've been shamed into saying that they're going to repay the loan. They got caught. Now they're going to repay the loan. Then, of course, you have the congressmen, senators, and Treasury coming out, and they are alarmed. They're outraged. Now they're going to have hearings. As if they didn't know. And if they didn't know, they're incompetent because they're the ones that set the rules. They negotiated this. How do you set your own underwriting criteria and tell the banks no bigger than X amount in capitalization? These cannot be mid to large size companies. Rubio demands banks explain if certain borrowers favored for PPP loans. Rubio's going to look great in front of the cameras. They'll be shamed up to Congress, guaranteed. Treasury orders public companies to repay PPP loans meant for small businesses. They better. And the key point, besides the fact that I'm just trying to drive home the fact that we just live in a society that is just, and you have to be open, you can still make a lot of money, but you have to admit, there's just a lot of unjust unfairness. It's supposed to be fair. You think it's supposed to be fair, but it's not. And this is what happens. These are the unintended consequences of government getting involved with business, with the economy. Whatever government touches, it screws up. And beyond the damage that it does by encouraging these banks just to continue on with their horrible behavior, it goes on to the social fabric. Now, here's an article. I want to share this. When you get a moment, I'm just going to give you the high-level view. Here's a lady that owns 3 3 massage parlors. And she held a video conference call with her employees who obviously aren't working. And she says, you know what? Listen, don't worry. I got a loan to get us through this nightmare. I'm going to continue to pay you. You know what these people did? They got upset with her. Why? It's because they added up. They were pissed that I'd take this opportunity away from them to make more money, my own selfish greed to pay rent, she said. They would make more money with unemployment plus the additional $600 per week added on top of it. Or bi-weekly, I don't know, $600 extra. Whatever the math works out to, they're going to get paid more rather than going back to work when you get the opportunity. This is the rot. This is what happens in socialist economies, communist economies. People don't want to work. And that's our edge, where that enthusiasm and hunger to strive to do better is replaced with this mentality of give me more. So this is what's happening. It's very sad. And this is what happens when the government gets into the business of managing economies. It never works out right. It works out well for them. In the end, works out great for them. They'll be fine. You and I, screwed. All right, more concerns. And, you know, I've been talking about gold and the miners, silver, for a few years now. And the gold miners making new highs now. Gold making new highs. The thing that's been lacking has been inflation. And you've seen bouts of deflation. No doubt about it. You're seeing deflation. However, and the reason why, before I go into however, the reason why you're seeing deflation is you're not seeing people spend money as much, right? Except through Amazon. Here's the problem, is that we're no longer producing. So now we're producing less. And now when we go back to normal, you're going to have people that are cash flush with some money, not a lot of money. They're going to have some money from the government. They're going to print more. And there's not going to be enough goods to go around to spend on. And case in point, 8 meatpacking plants close in weeks across America, stoking food shortage fears. What's going to happen to prices? Are they going to go up or are they going to go down? Think about it. So obviously prices are going to go up. And on a side note, I have been blasting China for a long time, but most recently with regards to the CCP virus, the Communist Chinese Party virus. And they have constantly, there's new headlines. China sends U.S. contaminated COVID test kits. Again, they sent over bad stuff over to Italy. They had to send it back. They said it was a donation to Italy. No, that was stuff that Italy donated to them, and they sent it back to Italy. New stuff. So the Chinese have done nothing but try to deflect the blame and just do more damage. They think they're being cute, but it's so obvious what they're doing. So, long story short, you finally heard, I got a text today from one of our members saying that on CNBC, there was a gentleman talking about Vietnam. And I've been talking about Vietnam. I said, watch Vietnam, watch Malaysia. Because you don't want to go buying the global ETFs. Because that has mainland China in them. China forced, MSCI, MCSI, to put overweight Chinese companies in their indexes. So a lot of these ETFs and a lot of these funds are overweighted mainland China. And I don't want to buy China. I want to short China. I want to buy the countries that are going to benefit. Malaysia, Vietnam, ideally the United States, having business come back to the United States. That's a little bit of a pipe dream. Unless, of course, they take a crayon around the old Rust Belt from Cincinnati all the way up to Rome, New York, including Buffalo. Make that Rust Belt a tax haven, just like the Chinese did. 30 years, no taxes. Bring your company here. You have plenty of talent there to work in those factories. I digress. More on China. U.S. blasts bullying behavior as China rattles sabers in South China Sea. And on a side note, if you don't think that this was all an attack on the United States by not just the Chinese inadvertently, perhaps, I wouldn't put it past them if there was something more nefarious, but the so-called argument between the Saudis and the Russians, Kyle Bass put it best here. I would suggest strongly looking at Kyle Bass's commentary with regard to China. All you need to do is Google Kyle Bass China. You see a bunch of videos. Kyle Bass is short of oil. So I want to put that out there. I have no position in oil. So he's calling it Saudis. Saudis and the Russians have declared war on the U.S. shale business. At current, we have a glut of oil here. The last thing we need is another drop of oil in the United States. We have 50 million barrels en route from the Middle East to the United States. Twice the amount that would normally be expected for June delivery is on its way here right now. And we're telling them, send those ships back, send them anywhere else, but here. They're trying to destroy the U.S. shale business. We became energy independent. They didn't like it. They're trying to take that business back. And they're doing a good job of it. When are we going to wake up as a country? This is another Pearl Harbor. These countries are taking advantage of our horrible fiscal economic situation. We have been completely taken by surprise here by this entire ordeal. I digress. Let's take a look at some comments. Nicholas, hi. Nicholas is over in France. Yeah, weakness in the market. We're expecting more weakness tomorrow. TA, hello. Amerimigo 1, hello. Franklin again, like your shirt. My After this, I'm going to have a nightcap. Trader Isaac, APT looks good tomorrow. I'll take a look at that. Pre-drag, brother. Steven, yeah, food. We'll take a look at the DBA, see if that caught a bid. That's the Ag ETF. I don't have a meat ETF. We can take a look at cattle prices, though, on Thinkorswim. Bob, I have a prediction of the worldwide, this is from Steven, I have a prediction of the worldwide death count, especially the third world countries and China and India. COVID-19 is going to wipe out 10% of the globe's population. Singular and secondary. I hope you're wrong. I'm not a medical expert. I hope you're wrong. Isn't it weird, though, how the Chinese death count is just so much lower than the rest of the world, yet their population's the highest? They must be telling the truth. Oliver, Baidu, China stock, 105 puts, okay. RL, hey Bob, hey RL. Eric, hey, how you doing, brother? Good to see you. Welcome. Let's look at some charts. But first, hit the like button. Let's do it. Let's take a look at Intel. I want to take a look at Intel on a. Obviously, we had earnings that came out 60% margins. I mean, wow. But they missed on revenues, missed on EPS. I believe on EPS. I know they missed slightly on down 6%. Yeah, revs missed. Oh no, they topped. Revenue at 19.8 billion versus consensus of 18.6. So they topped on revs. Well, I'm not sure why they're getting hammered here. Oh, it sees. Oh, okay. So it's the forward-looking guidance. I thought they stopped giving expectations. All right. Okay. Now that's why. So they're looking forward. All right, good. That's why. Now it makes sense. All right. So this is not going to bode well. And keep in mind that we're going to have, and this is one of the reasons we're short of the trip queues. So I don't want to lean into that short trade until we get the big names, Microsoft, Amazon on the 30th. I believe Apple and Microsoft are on the 29th. Those are your three big mega cap weightings on the trip Qs. So I want to be very, very patient with adding more. I want a validation that we're accurate with our call, that we're going to go down here. So I want to put more money to work, but not quite yet. And when you take a look, and we'll go to a higher level view chart of Intel in a moment. It's not going to reflect the after hours price action. But when you take a look at the trip Qs, I mean, they're taking it on the chin in the after hours. This is a 30-minute chart. That chart of Intel was a 30-minute chart as well. And we are breaking down big here through two support levels. This alert doesn't fire off after hours. That's why I was unaware of it. So I set an alert up here for 209 spot 24. What that marks was a breakdown below this support level here. And we got it. We broke down below the lows of the day. That's two support levels. Now, when we know that we're right on this trade, this is a 4-hour chart now. When we know we're right is when we break down below this mark here. I have it marked at current. It may change. 203 spot 26. That marks the lows of the recent sell-off. We did not go leaning in any further as we gained strength back, because what I wanted to see was, do we break out and rally into the 29th and 30th when the mega cap names report earnings? I don't want to fight that. They just may still do it for all I know. This entire market to rally up has been completely illogical. It's all about liquidity and the hope that Gilead has even though they dismissed that rumor last week, that article last week, the market still rallied on it. So Gilead comes out today, the trials are no good over in China, and the markets barely flinched. They went down, they dropped off the highs of the day, but they barely closed lower, at least the trip Qs. So, the market just doesn't make sense. So I don't want to use logic in this environment. I want to use validation. I want the market to say, all right, we give up rather than me giving up. I don't want to fight it. I'm not going to short more into strength when, for all I know, they're going to spike it above the highs of last week. And take note, this time last week, I pointed out the two prior peaks. I'll go to that chart in a moment. The two prior peaks and the last two bubbles, right at that declining 20-period moving average. And we're right there. We have not made a new weekly high. We have stalled out. So I'm not going to rest on my laurels that we're weakening after hours here on the trip Qs. For all I know, tomorrow, whatever's going to happen. Just like they did after that first jobs report, they'll announce some $2.3 trillion bailout for whatever industry. Who knows? Who knows what they're going to come out with? I just don't want to get lured into a false sense of security and getting all cocky until I see a close down below certain support levels, and then we'll lean into the short side. Not until then. Got to be disciplined in this market. Way too much nefarious behavior going on, and none of it makes sense. None of it. Okay. Let's take a look at Trader Isaac. Yes, please smash the like button. Thank you very much. Snap chart. Yeah, Oliver, we could do that. AMD, did they report, RL? Their chart looked really good earlier in the week. I haven't taken a look, though. Oofa. Aminoj. Given Amazon is a C19 play, it could be a great quarter. Do you have a level when you consider it to lighten up? Yeah, if we break out above the 20-period moving average on a weekly basis on the trip Qs, to answer your question, or on the S&P 500, one of the two. That's when I would have to stop at. We close above that level, I would have to stop at least a portion of the position, not all of it. I want to stay short. If I'm wrong short term, I'll move to the sidelines, go into earnings, and if they're weak on those initial reports, especially Apple and Microsoft, if we see a sell-off, then I'll lean back in. But right now, I don't have that large of a position where I can't carry it into earnings. Where I will have a large position is when I start leaning into that short position on a continuation breakdown below supports after a lower high on the trip Qs. So if you're overweight right now and you're not sleeping well at night, consider lightening up on a new daily high. If we make a new daily high tomorrow after today's news, you may want to lighten up. All right, because that means that they're just going to rally the trip Q names right into earnings. And it's a long time between now and the 29th. All right, it's only a few days, but in traders' lifetimes, that's a long, long time. So that's my feedback. And if you want me to elaborate more on it, Manoj, rephrase the question, and I'll certainly answer for you. All right, so if Manoj, you have a big position, there's nothing wrong. There's nothing wrong if you have a big position, setting a rule. If this, then that. If we break out, let's bring up the trip Qs. Let's talk it out. Let's hug it out. War game it. Okay, so let's formulate a strategy. All right, because if you're overweight a leveraged ETF, it's not good. Because even each day, you're losing a little bit of money, right? You're getting a little bit of leakage on that or slippage on that trade. So if we close out, as a matter of fact, this is what we'll do, because I see a great way to set this up. If we were to rally and close above, not rally above and fade away. If we rally above 215 and close there on a daily basis, you'd want to consider lightening up a little bit. If we rally and we flash a continuation move higher and we close above 216.51, which marks a new high since the sell-off, you want to lighten up a little bit more. Put that cash on the sideline. Wait until earnings, see whether or not the market goes in your direction. If it's going in your direction, then lean back into the short side. That's it. Keep it simple. Don't stress yourself out about it. I read that, Stephen. Yeah, more mismanagement of our funds. Good. I'm glad that helped, Manoj. So I'm going to send this over to you, Manoj, because I want you to have something to refer back to, because it's critical. Okay? Okay. Rick Roofing. Thank you, sir. Appreciate it. Great channel. Let's... I'm going to go over some requests. And Pre-Jag, that answer worked for you? That was good? Do I need to elaborate more? I want to go over the S&P 500. We went over this chart last week, and there's a delay when I speak and when somebody's able to reply, so I'll look for Pre-Jag's response. Last week, we spoke about lines in the sand. What were we looking for relative to prior bubbles? What consistencies are we looking for? And I spoke about this last week. This is the chart. S&P 500 Large Cap Index, monthly Bollinger Band, retrace. You may remember it. Good, Pre-Jag. Good. Okay. So, monthly chart going back as a reminder, okay? For those that remember, bear with me. There are new people watching, so I just want to bring them up to date. All right, so here is the dot-com bubble. We sold off, obviously. We had a counter trend rally, right? Where did that rally end? Right here. This dotted green line is the 20-period moving average, and it's up there due to the fact I'm using the Bollinger Band. So it's the Bollinger Band's using a 20-period moving average. And we rallied up to it. What did we do? We failed at that level. That was in December 2000. Fast forward a few years later, May of 2008. We had peaked out in November 2007. We sold off hard. Then we bottomed. Then we rallied. Where will we stop dead? Right here, the 20-period moving average. Where are we now? We rallied. Here's April. What was our high? High was 2,879.22. What is that Bollinger Band? 2885.52. So we pierced it, pulled back, resistance. Here's the problem. For longs anyways, a short, I welcome it. Here's the problem. That moving average is now beginning to move lower. It's going to act as a declining ceiling, just as it did back here and back here. Not that we rallied up to it all that many times. None, as a matter of fact. Until such time, and this is a great indicator of when you really need to be long of this market again. After we get the correction that I believe that we're going to get, and we're probably breaking down to new lower lows. I know that's in this environment, that's a horrible thing to say. It's so against the prevailing wisdom of Wall Street. But so what? 26 million people and rising out of work. What does that mean? Why should that matter? Anyway. Yeah, Tia, you got it. I'm glad you reminded me of that. I'm going to bring up that chart next. So here we are at current. At that level, we're pulling back. And if you take a look at a weekly chart, you versus last week when we first discussed that resistance level, we have not made a new weekly high. We've stalled. This is the first week since we bottomed out the week of March the 23rd that we have not made a new weekly high. So, warning flag, folks, the market is sending us signals, and we're using history to guide us. And we're not being willy-nilly. We're not buying into the fact that history told us that in the past, expect this to happen, and we're just shorting into that, hoping when we should fear. We're fearing, but we're hoping that we're right, and we'll short on the confirmation breakdown. We'll add more on that confirmation breakdown. Not until then. Now, TA put in a comment with regard to a chart I brought up last week, and that's the valuation of the S&P 500. And I will share it. I either have it on SPX or SPY. It's got to be SPX. Yes. Okay. So this chart, I just copied the link. It's in the chat box below. So here we are. We have the pontificators on TV. A lot of them backing away from we're going to retest, we're going to correct, because they don't know. They're confused as well. The probabilities of us not retesting are highly improbable. Not when you have 26 million people unemployed and rising. Not when you have a virus and a country that is in lockdown. So it's improbable. At some point in time, logic is going to, I hope, take over again. So this chart here reflects where we're valued at current. And remember, the majority of S&P companies have not reported yet. And this does not take into account next quarter's earnings, which is expected to be a lot worse. This is this quarter's last quarter's numbers. So quarters for Q1 2020. In red, we have overvalued. Red line, that's a PE over 20. PE 15 represented in blue. Looks purple to me, but blue. That's fair value. PE 10 is undervalued, way down here. At current, we are overvalued again. And that's not with all the companies reporting. And that does not include a forward-looking multiple. Could you imagine if we put on here the forward-looking multiple of how expensive this market would be? So the question I have is, what the heck are we doing up at these levels? I mean, it's a simple question. Is the market fairly valued, undervalued, or overvalued? Question one. Question two, do we expect it to be more overvalued this time next quarter? I think it's a fairly simple question. And what are the technicals telling us? And that's what we're using as our guiding light. All right, let's do some stock chart requests. I don't have a whole bunch other to go over tonight. All right, I'm going to make a list here. I think one was APT. I want to go over INTC, high level view. Baidu. If I miss one, let me know. I need to sign off sharp at 7 o'clock tonight, so I need to go through these quickly. GDX. Spiders are rolling over. Good. They have tortured me these past couple of weeks. Halliburton, fat premiums. Fat premiums on, I was looking at it, and by the time I didn't want to get into it. I'm saying, wow, take a look at these premiums. And I got caught up with something else, a nightmare earlier in the week, which is still going on. It'll be going on for the next few days. And by the time I looked, it had taken off. SPR? Bob, you have a big microphone. Thank you, Tricia. Great setup. Thank you for that. How? What else do we have? SPR? All right, so I'm going to leave off with these. All right, let's do this. We'll use our friends over at TrendSpider. You get a discount. Use the link below, CT25Z, 25% discount code. TrendSpider. Automated technical analysis. That's right, Oliver. I forgot about you. Sorry, brother. All right, let's do this. Let's go with Intel first. All right, so this is including the price action after hours. Go TrendSpider. Good for you. Or is it? No, it's not. Low 55.35. No, that's the wrong thing. Wrong chart, dumbass. Yep. Okay. All right, so good. This is real time. So at current, oh boy, this is bad. All right, let's go high level first, and we'll drill down here. All right, so we have to make certain assumptions before I go over this chart, because it is real time. So I want to caveat. I want to preface what I'm about to say is that we don't know where we're going to close out tomorrow, right? This is after hours price action. It's probably pretty accurate. I'm sure it's on high volume to move these shares down this much, but let's put that out there. Now, what we've seen over the past few months are lots of topping action. Obviously, February was a beast. March, a beast, but we bounced back. So far this month, we remain up. But here's your upper band of resistance, and we couldn't hold support levels. I drew these a couple of weeks ago. RSI is still rising. Stokes are weak and getting weaker. Weekly chart. Now, it's a bad setup. Let's do this way. All right, so this is good support here, 55.33. So that's your line in the sand. So 55.33, give or take a couple of dimes, all right, is critical support because it acted as support back here in February, early March. Then it was resistance late in March, twice, 2 weeks in a row. We broke out above it. Where do we find support after hours today? Right at that level. If it breaks, we are coming down. You have a lot of volume down here. I would say support level number one is at around 49.38 on Intel. If we break down below 55.33. Daily chart. Now, the reason I pulled this chart up first, and the reason why I said that it was a bad chart is because we have not only flash and outside reversal day on one day, meaning yesterday. And for those not familiar, an outside reversal day or a bearish engulfing, when you engulf the entire move of the prior day, we didn't do it for just yesterday. We did it for also the day prior. So this is pretty bearish stuff. Our Stokes are rolling over. Let's check out the volume here on the raindrops. These are VWAP candlesticks. Not as bad as I would expect. Not good, but not horrible. So Intel is a lot of trouble here. Let's drill down here, see how this is a 2-hour basis. Moving averages are breaking down. So we'll keep an eye on 50. That's not reflecting the accurate price action. The intraday chart's not reflecting the accurate price action. All right, so I just learned a lesson. Okay. So in short, bearish chart. Be very, very careful of Intel because it could quite very well become a short. I'm not going to short it, but somebody else certainly will on a breakdown. That's Intel. Germano, how you doing, brother? Good evening, Bob. If you look at a 10-year monthly S&P chart, do you think that a recent bottom can be interpreted as a double bottom setup, retesting? We'll take a look. Oliver, lots going on right now. Folks, we'll come right back to these charts. Let's take a look at the futures action. Oliver's giving me the signal here. We're down about 0.5%. Let's take a quick run through the futures. NASDAQ 100. Wrong chart. I just accidentally clicked on the Nikkei. They just doubled up on their bond purchases, and they're dropping like a rock. They've been doing this for over 20 years now. This is going to be us. NASDAQ 100. Down nearly 0.75 of a percentage point. Breaking key support. Validating, and this is what I was looking for on the trip cues. So we're breaking critical support levels here. Let's take a look at gold. Gold's a little weak. Let's take a look at the miners. Not much action here. Okay. Let's bring up the dollar. See if it's being viewed as a safe haven. Not much happening. All right. Normally, what's going to be interesting is what happens after 8 o'clock Eastern Standard Time. You'll notice that many times after the after hours trading ends, that's when you see big price movements in the futures market. So if there's going to be a real sell-off tomorrow morning in earnest, wait until 8 o'clock, then come back and check the futures, because you'll see momentum pick up to the downside. These are the June futures on the S&P. They're coming off the lows a little bit. Now they're down only about a little over a third of a percentage point. Okay, let's go back to Germano. I didn't forget your question. I'm interested in seeing what you're talking about. So we'll definitely take a look at the S&P 500. APT. Alpha Protec. Never heard of them. What's their business? What industry? Alpha Protec, APT? I don't know what to say here. I mean, wow. It's coming off of a very, very overbought condition on a monthly basis. Weekly chart. Now really you just got to look for a consolidation and an entry point. So nice support here at around $12 a share, a little bit higher than that, $12.20, $12.25. It's consolidating these gains. It's holding for the past several weeks. So what I would do here, as a matter of fact, I don't even like this line. I'm going to delete this. I'm going to redraw it because it's interesting. Oh, I hate when they let me draw an alert. Create an alert. Okay. So keep it active for a few days. Leave some sensitivity there. All right, so there's our support level. And I want to know, it's a momentum stock. I want to know if we break out and above the upper band of resistance. Now, if the market's falling apart and it breaks out, I'm not a big momentum trader in a bear market. So it really depends upon the story. But I may look for a long to offset my short if it's showing relative strength. Really nice daily chart here. Okay, so technically we broke out today. So what I would look for here on this stock is a retest. I want to be notified as quickly as possible. APT. Okay. So we only need to keep this active for, I wouldn't want to buy it unless it did a retest. 2 days. So I like the stock, very bullish. Like it. The only thing that can hurt it is the market. But it didn't hurt it back here. All right, so that's APT. Baidu. For disclosure purposes, I am short of China, not short of Baidu, short of China. Using a leveraged ETF. I don't like this chart. I'm telling you right now, avoid it. I'm just going to go to a weekly chart here because it's all that matters. I could have drawn this a lot tighter. All right, let's do that. All right, so here is your rising wedge, ascending wedge, whatever you want to call it. Call it cupcakes. It doesn't matter. This is bearish. Lots of topping action. I drew these resistance levels weeks ago, and they have stood firm as being resistance. This week, we have a bearish key reversal, and we have broken down below support. So this rebound, this retrace is failing. The counter trend rally is failing now. And if the U.S. markets are going right now, sure as God made green little apples, the Shanghai Composite is going to be going down as well. So beware. Avoid this stock. It's a possible short. Today's price action, very poor. Bearish key reversal day, I would avoid it. There's nothing more to say. Just avoid it. And if we break down next week to a new weekly low, it's quite possibly a short. Tesla. My man Elon. Crazy SOB. Amazing, this company. The strength of this stock. All right, so here you have lots of topping action, right? You don't want to see this. You don't want to see this. As a seller's above. So you've had how many months? 3 months of topping action. We're not holding the gains. Weekly chart. We broke out. Nice follow through last week. We were in a ascending wedge, an ascending wedge formation. Excuse me, folks. This week, no follow through to the upside. It's an inside week, just like the rest of the market. Right? We went over the S&P 500. No follow through week over week. RSI, lower highs, daily chart. We're holding support. But if we break below today's lows, I wouldn't go buying the dip. I wouldn't do that, especially if this market rolls over like it may. So just be very, very careful. I don't like the setup here. I don't think there's a trade here to be had. Now, if we start doing this, breaking out above 774, or were this a healthy market and I weren't worried about a market crash this week or next, I would say, you know what? Buy here at the support level, use a tight stop, and let the market take you out. But this is not a healthy market. This is a good range here to trade in. It's not a healthy market. It's a fake market. If it weren't for all the money being printed hand over fist and wasted. Look what they did. The Treasury did this. Congress did this. They set the underwriting criteria, not the banks. Treasury, Congress, they negotiated the deal. They gave the money away to large businesses, not small businesses. What are we doing now? Another $400 billion worth of money getting printed. It's ridiculous. I digress. I'm sorry. It's crazy. I would avoid these shares. I wouldn't short it. Halliburton. It's had a nice run. But I don't think you could buy energy here. It's an oil services business. But who needs oil services? I like the premiums that it pays. I mean, you get some big fat premiums, but the reason why it's getting paid those big fat premiums if you're selling calls or writing puts, because you're taking on so much risk. They're not going to pay you a premium that fat for no reason whatsoever. You're taking on a lot of risk. And I don't like selling premium on individual stocks. Too much risk. I'm not worried about an index coming back. I'm worried about a stock coming back. So I can't buy it for the premium. It's coming off of its lows. They do the military as well. Is that enough? Halliburton's a massive business. And I don't know. Maybe it is. For all I know, Marimigo. I don't know their balance sheet. I don't know where their businesses are at. But primarily, they're an oil services business. And today, or this week, I mean, the price action this week is very, very good. It's an outside reversal week, a bullish engulfing week. We have a megaphone formation where we have a rising upper band of resistance and a widening lower band of support. It's rising. So it can move higher here, but I'm worried about oil. Way too much of it and no need for their services. Now on a daily chart, we rallied right up and into resistance today. So I couldn't buy it here because we're at resistance. If we pulled back to $8, $8.12, then it becomes interesting. Where do we close today? $8.93. And right now there's a lot of volatility in this stock, so it pays. Allow it to come to you. Don't chase it. As a matter of fact, I'm going to put an alert up here, because it could come back down. Fat premiums. We'll keep this active for a couple of weeks. Always on the hunt for low dollar, high premium stocks and ETFs, but mostly stocks at the low dollar. All right. So we're good to go there with Halliburton. Like it, just concerned about the business. That's all. SPR. There's Spirit Airlines. Ugh. You got to avoid. They have caught no bid from this recent rally. I mean, even UAL was up today. I think they may have given back those gains, though, by the close. And one thing I wanted to, I'll go to this chart in a moment, but I don't want to forget. You know, the main reason why the market has rallied for these past 10 years is corporate buybacks. Now, the companies that accept these bailouts in the airline sector, in the oil sector, they can no longer buy back their shares until the loans are repaid, plus 1 year thereafter. Why they would do that, I have no idea. And they can't pay bonuses 1 year after to their executives. But that's the government. So if in fact it was corporate buybacks that were pumping up the market for 10 years and it's gone now, what's going to force the market up higher absent more quantitative easing? Now get a load of this. Here's the real kick in the pants. A lot of these companies are going to have to issue new shares. They're going to have to dilute their shares to raise capital. So not only cannot buy back their shares, many companies are going to have to sell new shares or issue preferred shares, whatever. But they're going to have to go back to the markets to raise capital. What's that going to do to their balance sheet? What's that going to do to their share price? It's dilutive. So, and there are arguments that are saying, no, they're raising capital, they're going to pay down debt, yada, 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 whatever. More shares on the market, not enough demand, prices go down. That's what typically happens. So, this is a buzzsaw that we're walking into if you're wondering why. Why is this guy so bearish in the market? That's why. One of the reasons. So, back to Spirit. Bearish key reversal on the month so far. I mean, we bounced here right at prior support. We even overshot that support to the downside. But we bounced. I'll tell you, if we break down below the March lows, this stock is going to appear on my extreme oversold stock list when I do my scans. So it's consolidating nicely here. Bearish key reversal bar on the day. No breakout yet on Stokes, but we are seeing higher lows. So we may break out. Maybe we'll break out. We'll get a pop. But it's highly improbable if the markets begin to fall apart. So the trade here would be fine. You want to buy the shares, scratch the itch, buy a few shares. Stop loss right below. Support at $18.18 per share. Keep it loose, $18 per share. Then you add on a breakout above $22 per share. I'm not even going to set an alert. I have no interest in the stock or the airlines as a whole. So that's the play. Stop loss right at that $18 per share mark and just get out. I'm sure there's a bunch of shorts in here ready to get squeezed. So if you get a breakout, fine. Go for it. Just use a trailing stop loss order. Once you see a sign of weakness, get out. I'm not a big fan of the airlines. All right, Snap. I'm running over here. I got to go through this quick. Go to a weekly chart first. Well, you know what? Wow, good week. Let's go to a monthly chart first. Has Snap reported earnings yet? Does anybody know that? I'll tell you, it's a real pretty chart. They have. Were they good earnings, Trish? Trisha, I'm sorry. Minoj, they were good report, huh? Okay, cool. Damn it. I hate that they won't let me create an alert here. If Jake or Dan at TrendSpider are watching, please allow me to set an alert here. I thought I was able to do that at one time. When I draw a descending trend line or an ascending trend line, it's not letting me draw an alert any longer on a breakout. Okay, so I like this setup here quite a bit. And this is on a very high level view. Again, this is a monthly chart. And I'll talk about it in a moment. Let me just set these alerts up. Okay. So we hit resistance this month, which is okay. It backed off. Um, we have support down here at the 1414 level. That would be a great retracement to get involved with the shares at. But if we don't, a breakout next month or this month above 1645, that would be nice. The only caveat is I need the overall market to be with us. Weekly view. Again, we have resistance above, no big deal. So I can't buy it here. Daily chart, maybe there's a better setup on a daily basis. Damn. All right. So sometimes, first off, the reason why I'm saying damn is that we had a strong day yesterday. I guess they reported earnings the night before, and that's the reaction. Is that accurate? So we spiked up higher, up and into the third standard deviation Bollinger Band right here. In short, we're not supposed to be there. All right, so today's reaction pullback is expected. I'm not all that upset about it. It doesn't mean I wouldn't want to trade the shares. It just means that in all probability, we're going to come in a little bit, especially if the market gives way. So I would be looking for is let's go back to my alerts. I'm going to show my alerts on all time frames. Not just monthly. Right? Is that accurate? All time frames. Good. Okay. Daily chart. All right. So there are my alerts showing on a monthly basis, but on a daily chart. So what I'd be looking for here is a filling of the gap. Now, sometimes stocks trick you, right? You'll think that a filling of the gap means the closing of the gap, which opened up on the 22nd. So it would have to come all the way down here to a bare minimum of 1304. Doesn't always happen that way. Many times, it'll pull back to the prior peak, and that will be considered a filling of a gap. And that's at where we have an alert at current, which is at $14.20 per share. So it's a good chart. I couldn't buy it right now. I could buy it on a close above where we have an alert drawn, or on a pullback down here. We're already set. I don't need to send any more alerts. We're good to go. Let's overlay some resistance levels, and nothing pops up. That's fine. Did I have? No, I didn't have it. There we go. Oh, look at this. So this on a daily chart, I'm using in dash line weekly overlays. We have a lot of resistance above here. So we really need to close, not even where this alert is, actually up above here. And this is why I call trend spiders like my spell check for technical analysis. Sometimes I miss some of the extrapolated out resistance levels that their software picks off. Oh, duh. Now we're good to go. Okay, cool. One more. I saw one more up there. GNMK. Genmark Diagnostics. Wow. What sector is this in? Is this a COVID play? I'm not doing COVID plays right now. I've had my fill. What do I use to trade? Sean, what do you mean? In terms of charting software, or can you elaborate more? Brokerages? This is a beautiful chart. I use TD Ameritrade. I have a bunch of them. TD Ameritrade and Fidelity, and I have an account for hard to borrow shorts over at Short Trader, but I haven't used that in a long time. I don't even know. I don't think I have much in there. I don't think it's funded, but sometimes I'll use them for hard to borrow shorts. I won't, Germano. I made a note. All right, so GNMNK, it looks like it's going higher here. My guess is a COVID play. It's a momentum trade. It's so overbought. I mean, you're trading above the 3 standard deviation Bollinger Band. I can't buy it here. Daily chart. And just because I can't buy it doesn't mean it's not going higher. It's a COVID play. Okay. Let's check out the raindrop charts. Beautiful close. So for those not familiar, raindrop charting, it's a mixture of candlestick charting and VWAP, volume weighted moving average. So what I look for on these candlesticks is if we closed up and I'm considering buying it, do we have a fat, I call it a pregnant candlestick, on the right side? Because that's the PM price action. If it's fat, it means you had a lot of buying into the close. If it's skinny, you didn't have too much buying into the close. So I want to see buying into the close. In all probability, this stock is probably going to go higher. Your short snap, we have a lot of resistance above, but I don't think it's a great short trade. Well, let's go back to that for a second. Long story short, GNMK looking good as a continuation play higher. I probably wouldn't buy it though, because it's just not in this market environment. I've had enough with COVID plays. If that's what it is. We have earnings coming up on May 4th. Definitely not buying in advance of earnings. I would be booking profits because that weekly chart, trust me, you see RSI. Where's RSI at current? RSI at current on GNMK is at 85.24. If they spike it up higher, you're going to be flirting with the 3rd standard deviation Bollinger Band on a daily basis. If they keep this trading higher, let's go back to regular candlesticks. If they keep it trading higher on a weekly basis up and into earnings, you have to worry, are great earnings priced in and will they sell it off? So be careful. Be very, very careful. All right, spring snap back up. All right, so I'm trying to look it through your lens of being short. All right, what's going right for you? We're off the highs of the week. Where'd you short? 17.15? You shorted at 17.15? Good price. Good for you. Hit that like button, please. Daily chart. All right, so I think you have a couple of points here to go. I would be booking profits down here, 14, 17, around there. I wouldn't even wait that long because it's going to happen like that and book those profits. I don't know whether or not you're going to get a big break here. I think there are other fish in the sea out there that are pretty weak. So good luck with it. Let's go to, before I sign off, S&P 500. The question from Germano was, are we seeing, Germano, was that on a weekly basis or a quarterly, monthly basis? We'll go with a weekly basis. Because we're only talking about 2018. Let me go back to your question. Germano, wish I could filter these. 10-year, December 2018 lows. No. No. We undercut those lows. And you could argue that, you know what, we undercut the lows of February of 2018 and we rallied off to new highs. Keep in mind that we had the Federal Reserve that was doing an about face. Remember, they were saying we're on automatic pilot with running off our balance sheet. That's why the markets were cracking. Now we have the Federal Reserve, which has already fired off multiple bazookas. And every time they fire off the next bazooka, they get less and less out of it. So I honestly don't think that you could possibly compare the two time frames of now at current. Remember, unemployed here, what, 3.5%? Unemployed here, 15%. We have left the matrix, right? We're in a different world right now, and we're about to get red pilled in a very big way. So, no, I think what's going to happen is this. They're going to try to defend this level here at around 20, let's call it 2690 on the S&P 500. If that fails, we're coming down here to around, let's call it 2650. I don't think that we're going to have this type of a sell-off. I don't think we're going to get it. I think we're going to get more akin to what we saw probably back here. And it's not on this chart. I need to bring up a monthly chart of the let's go with the $25-year view. Here's what I think is setting up. Is a bear market similar to this, where we don't have panic selling like we had in March. I think it's going to be more orderly, and it's just going to be consistent. So, no, I don't think you could draw the two. I think that entirely too much technical damage has been done, and we're about to begin to fade yet again. Let's take a look at the futures action. And not much has changed here since I last looked at it. Gold is up now. All right, so That's it for tonight, folks. And I don't like gold right now. I'm a little bit concerned about it. I'm bullish, longer term, short term, at least on a 30-minute chart. Head and shoulders set up, left shoulder, head, right shoulder. I'm worried about weakness here on gold. So that's it for tonight, folks. Please smash that like button. Thanks for being here. Really appreciate it. And subscribe to the channel. And everybody have a great night. I'll talk to you soon. Be well.